I'm going to tell you a little bit about myself, Delio, and kind of the journey of Impact Agora very shortly. But first, just want to kind of give an overview of the agenda, which is really a exciting agenda that I have the pleasure of introducing today. We're going to hear from Damien, who's many of you will know is the head of Impact Investing at Barclays, to talk around why Barclays have been leading and driving this work in Impact Agora and what it means to them. We're then also going to hear from Sarah Godden from the Impact Investing Institute about their work and driving a lot of business into impact investing and really making it stand out globally. Before we hear from some of the panelists, and we're going to hear from some panelists that are early founding members or future community drivers of Impact Agora and their reasons for getting involved and what Impact Agora means to them. Before hearing from Rod from UK Business Angel Association about community angel investing, early stage investing, and a lot of work they've done in the past at really bringing together people to syndicate and collaborate between a single organization. That's what we're talking around with an institutional marketplace for impact investing. Means lots of different things, lots of different people, but Impact Agora at its core is about a community of people for connecting together for impact investing. And so getting on to kind of introducing myself and where it started before I hand over to the great panelists we have, I just want to tell firstly the story before kind of getting on to where we started. I want to talk around the story of Delio a little bit. I'm one of the founders of Delio. And just for those of you that don't know, as a short introduction, we specialize in private markets technology, particularly wealth management, private banking. That's where our focus is around helping the financial institutions digitalize how they take private deals to their wealthiest investors and their family offices. We work with Barclays, UBS, Coutts, ING, National Australia Bank, down to small multifamily offices on how they take their deal flow to their private clients. But also beyond that, we work with a lot of angel networks, corporate finance advisors, placement agents, fund managers that all have common challenges that technology can help them solve. And our technology, when we talk about it, is actually, it's white labeled, branded technology. There isn't a Delio platform. We build technology to meet the goals of our clients, helping drive their revenue, helping them decrease their risk, manage their governance, help them just work more efficiently through tools that sit across how they review their pipeline, how they distribute to their investors, digitally opt up their clients, all of the governance statements, give them the nice shiny portal so they can see the deal data, through to the ongoing transaction, document management, data rooms, and through to the reporting delivered in a quite a modularized way. And we work with those clients in a variety of different areas. And technology is our core business. Delio is a technology business. But what we also do and spend a lot of our time doing, that comes onto the journey here with Barclays, is we spend a lot of our time thinking with our clients on how to really meet their goals and drive their ambitions. And when we started speaking to Damien and the impact team at Barclays kind of 18 months or so ago now, around what they were wanting to achieve, it all started with, well, we have this great demand from our clients. Our clients are so interested in impact investing. We know that our clients are increasingly wanting to allocate to private impact deals, but we need to kind of look at how technology can take that to us. We want to manage the compliance, the governance, etc. But actually, when we looked at it and started on this journey with Barclays, it was more than just a technology need. It was actually, a lot of it was about actually, how do we find the right deal flow? How do we find the right partners? And when they went out to the partners to find the ecosystem, to bring them in, to build that sustainable deal flow, to meet their clients' needs, and actually what they saw was a fragmented market of either subscale players or people that were working on the same deal, but working separately and disparate data sources, or were struggling to find new capital for some of the great impact deals out there. And because they didn't have the reach or expansion or penetration on mainstream investors as well, for that matter. So Barclays looked at, well, actually, great, we can bring our capital as the UK's largest wealth manager. But actually, there's a lot more here we can do as a bank. We can help invest in the technology, the infrastructure to connect these parties together, to help improve their processes, to help digitalize, but also bring it together in such a way that we can connect new capital into it. And Barclays took this out to find, yes, great, this helps solve a need for Barclays and our clients. But if we build that infrastructure and support other organizations and bring new capital and new partners together, that is what can enable the ecosystem to grow. So Barclays have led this, have driven it, have helped innovate and have funded this to get it to where it is, but have been able to enable this for other capitals to come in. And that's one of the things that I get most excited about all the projects we get to work on at Delio, is this project with Barclays is more than just one institution. And that's why normally Delio sits as kind of the silent plumbing behind it and as the technology partner. But in this, we've been able to really help Barclays take this to working with a broad range of institutions, be that other accelerators, wealth managers, who can all have their own individual white label platforms to take their deal flow to their own investor base, but can also use it to plug into central areas. So if we look at the journey that we've actually come on and how that builds and how it grows, that started as Barclays going, well, actually, we want to do a bit of a proof of concept. We want to pilot this, test it and learn it, make sure the technology works. And we work with some great early stage partners in the impact investing space to see how they could use the technology to take impact deal flows to their clients and report on not just the kind of the traditional financial metrics, but the impact metrics. But the evolution of that then, and the vision always along the way, is using those single instance technology solutions to all connect together to a bigger community. And where we're in that now is we've been, over the last couple of months, have been the manifestation of that is an aggregation platform where Barclays can go, that the teams responsible within Barclays for private deals and taking them on with to all of their ultra net worth and family office clients can access that central portal and aggregate and take the deal flow from around the market, having visibility all in one central place, but also bringing in new investors into that. They brought other family offices, they brought some of their peers, they brought in firms like Rathbones or Elkstone that are other multifamily offices that they can come in to bring new capital to the ecosystem. And bringing that extra capital in is that real driver for the ecosystem. So we're now in the process of today, and what today is about is actually launching that aggregation platform. The first day, the first kind of shiny launch beyond the private beta we've been doing to make this available for the rest of you to come on board and get involved in this ecosystem. Beyond that, though, is actually as that community grows and other people use the technology for their own networks, that expands and grows into a broader underpinning market infrastructure. And it's exciting to see how that can grow and scale beyond the aggregation platform itself. But that aggregation platform is a key building block in the journey and is what we're really excited to be able to launch today and be able to take out to the broader impact investing community. So Matt from the team, and so just on the line, we have Matt, Ash, and Raresh, who many of you have known is the Impact Agora team, and Matt's here is brought up the actual platform because we have the ability to speak to some of the participants later, or the early participants, but just in advance of that to help frame it, it's thought it'd be just good to help you guys visualize what actually Impact Agora looks like. So here what we see is an investor coming into Impact Agora. They've gone through any compliance journeys, anything they need to do to bring into this. They've set their criteria, their parameters for what they want to see in impact. But around here, they can now search and filter all in one central place, an aggregated suite shop of deals across equity, debt, real estate, it doesn't matter, from different partners, linked to different impact goals. They've got directs and funds. And if we look across all of the deal flow here, there is such a wide range of aggregation across it. We have some of the leading funds in the space. We have some of the leading direct deals in the space. I think if Matt here clicks into this deal, we can see how this links to the impact interest of the investor that can have all of this aggregated into one place. They can see not just the financials of this deal, they can see the impact story beyond it and how that wants to translate. But that's not just on that can be just on the direct basis, or it can also be the funds. We have the leading SITR funds from Resonance all brought through into one place. Some of the great exciting funds from the likes of Zero Carbon, from EKA, all enabled to be able to showcase all in one central place for investors to access that. So intermediaries and kind of deal providers can also use this then as a way of putting their deal flow out there, whether that be co-investments, they're looking for other partners to come on board with, whether that be them working as a brokerage and trying to expand their reach and reach either Barclays or the wealth managers, or whether that's a family office looking to syndicate and co-invest with other family offices. There's a broad range of ways that different participants in the ecosystem can get involved. And that's what we're launching here today. This has been great to work with some really close founding partners that have helped shape how this evolves. But today is all about making this available to you guys to learn and understand and look at ways you can get involved. So hopefully this short introduction gives you a bit of a flavor of Agora, what we're about, why Delio got involved in, and how we've got involved in the journey, and gives you a flavor of visualizing. But I think far more importantly than listening to me is actually if you hear from Barclays around what it means to them, and we hear from some of the other partners that we'll pass across to, then great. So for me, that's a very short introduction, and thank you for listening.
Thank you, David. So I'm Damien. I head up our impact investing proposition at Barclays within the private bank. With my team at Barclays, we really have two main roles. One is first to guide our investment teams on how to truly integrate impact considerations into our products and services. And secondly is really advising the clients, individuals, families, charities, and foundations on how to change how they invest, both through the financial returns and the positive contribution to our world. Having launched the effort about 5 years ago, it's been a joy and a challenge to lead some of this journey. And large firms like Barclays tend to be more visible, both positively and negatively, in our role in the financial system. However, it's clear to me that we're only one part of that system. And in fact, for the impact investing field, it's the early stage market and it's the intermediaries who are arguably more critical to its success. So why is Barclays sponsoring Impact Agora? As David noted, we've seen that increasing client demand globally to invest with and for impact, and particularly into early stage opportunities. Now, from experience, the reality is it's difficult for us to onboard every interesting impact-driven company or fund, both in terms of time and in terms of fit. And even if we do, we just never know if we can always match the opportunities with the client capital. And in conversations with others, I kept hearing the story that David talked about: fragmentation of the market, the struggle for new players to access it, and really the need to maintain integrity of impact as it goes mainstream. And so while we want to build high quality pipeline for ourselves and our clients, we saw the problem is just bigger than ours. And as David said, within Barclays, we use Delio both to run our direct investments and our EIS and VCT services. The technology is helping us to scale these private markets for our clients, so it's natural to partner with them to develop the idea of the wider ecosystem. And we were able to secure some financial sponsorship from our private bank leadership and our social innovation facility, which has allowed us to fund the last couple of years of work through the initial idea and testing, through the technology build, the private beta, and now the central hub. And I'll say, until we've established this ecosystem, or it's clear there isn't a need or an appetite for one from the community, we'll continue to support it so it's free for the community to grow and build in a way that's right for them. Now, of course, as it continues to scale, we'll determine with Delio and the members if it needs to continue to be Barclays alone, or other sponsors can come on board to help to support it, or if it creates its own self-sustaining commercial model. So our role here is simple: continue to provide that patient capital to enable Impact Agora to be a success, and moreover, not just provide funding and declare victory, but really continue to roll up our sleeves to support the growth in membership, the engagement between members, and the community governance. And linked to this is the fact that we can also help provide visibility and voice for members of the community. And finally, of course, we want to be active members, and not just through our private bank, but I think what's exciting is the response that I've had from other parts of Barclays. So our social and impact banking team sees this as a way to share deal flow on which they're advising, as well as find deals for institutional clients. And we know our corporate clients will be looking again for the innovative companies for strategic investment. And our UK business banking team are reviewing how this can serve their impact businesses and social entrepreneurs. So I always get asked, what's in it for Barclays? Why are we doing this? And hopefully you can see there are clear benefits for us on how we serve clients across the bank. And I do hope Barclays will be positively recognized as helping to build the market. But underneath all this, I think there's how we've come to see our role as a bank as well. We recognize more we need to play our part in solving today's most pressing challenges. And at the same time, addressing those challenges is critical to our growth and success. Confronting the interconnected and the complex issues we face will require trillions of investment and more innovative approaches to finding and then financing the solutions. And as a bank, one of our roles is to provide access to capital, either directly or via our clients, and really to commercialize and scale the organization solving these problems. And from my perspective, the impact market, we really need to strengthen the early stage and the intermediaries that are working there. So our ambition is for Impact Agora to convene this community and to build a foundation that enables it to sustainably and globally scale. We want to bring in the intermediaries and allow them to continue to do their work and help make them successful, whether that's running your fund or accelerating your startups or scale-ups, finding co-investment, advising your companies to raise capital, as well as the other side. We want investors to find the opportunities that are attractive to them, not just the ones they stumble across or really help to separate the signal from the noise that we see in the market. And at the same time, new capital needs to come into the sector, and they'll come in because they know Impact Agora is the place to find the high quality deals and funds. I guess, my hope is that in a few years, Impact Agora is enabling the sector to worry less about finding capital and finding deals, and much more about how effectively it invests and how to put it to best use to solve our social and environmental problems we collectively face. Now, today, we're not there yet, which is why organizations like the Impact Investing Institute are critical to help us to build the market. Last year, near the end of last year, Sarah Gordon, who's the first CEO, helped to launch the Institute, and she's joining us today to share a little bit on how she's seeing the market and what it needs. So, Sarah.
Hi, thanks, Damien. It's very good to get the opportunity to speak to you all today and to be involved in the launch of this really exciting initiative. I know that not a lot of you won't be at all familiar with what we do at the Impact Investing Institute, so I'll just very quickly talk you through that. As Damien said, we launched officially last November, and really what we're about is connecting mainstream finance better with impact investment opportunities and bringing the financial services sector closer to impact investing. I think that one of the ways of showing how we do that is to talk about something that we're involved in at the moment in response to the current crisis, where we're working closely with banks, with social investors and lenders to try to channel more capital both to SMEs, to social enterprises and to charities, all of which are currently struggling to get access to the new government funding which has been made available. And I think that sort of connecting people and connecting different parts of the the different investment sectors and with the opportunities, as Damien says, to address the social and environmental challenges that we face is very much why we were brought into existence. So we spent the autumn thinking about really what were the most important hurdles that were inhibiting the growth of the impact investing market. And some of these reasons will be very familiar to you on the call and indeed to Damien. There's sometimes a lack of awareness of impact investment. There is no standardized measurement and reporting around impact investment. Big institutional investors say there's a lack of investments at scale, there's a lack of track record, we don't have the evidence base that we need. And we at the Institute are addressing these in different ways. So we are awareness raising with institutional investors around what impact investment actually is. We're developing a suite of educational material to help, for example, financial advisors have better and more informed conversations with their clients around impact. And we're supporting efforts both in this country and outside the UK towards global convergence of standards for measuring and reporting impact. And we are involved in discussions around policy and regulation. It's a very live discussion. I think it will get, it is even more important, the discussions around policy, given the current crisis and what kind of world we will emerge into after this emergency phase. And one of the things, Damien himself was involved in one of the initiatives that led to the Institute's foundation. And as he says, we heard again and again and again the same complaint, which is there's capitals that keep saying it can't find deals, and there are deals saying that they can't find capital. And so we're incredibly supportive of any effort like the Agora that connects the two. I think it's a very exciting time to have launched the Institute, because there is there's real momentum around this agenda. There's growing interest in impact investing from institutions, but they are unsure where to access high quality deal flow. And that funding gap for early stage ventures, what Unlimited, the social investor, calls the missing middle between the capital provided by the seed stage investors and the growth capital provided by the venture funds, it's a really important barrier to the growth of the market. And there's a crucial role for intermediaries such as accelerators and advisors and angel networks to play. And I think that's particularly important now, because obviously in the current environment, most ventures are finding it challenging, and venture investors are having trouble identifying ventures that can thrive. And if you're one of those, you're going to be sought after. But for buyers and intermediaries in the current environment, it's anything that contributes to bringing the deals that will genuinely thrive and the capital that's willing to invest together is really important. And of course, one of your biggest fears if you're investing in ventures is that you won't find other capital today. So the Agora is great for that. And I think one of the reasons I feel that the Institute is particularly aligned with what Barclays is trying to do here is that the traditional mindset around VC is to be proprietary around deal flow. But I think this initiative is one of the many examples of the willingness to collaborate within the impact VC sector, which is really fabulous to see. And at the Institute, we're also very much about creating community and increasing connections and connectivity. And we see ourselves as a touch point for the impact investing community. And we're very much looking forward to supporting the Agora and those using it. So thank you very much.
You're on mute, Damien. Trying to get a message to Damien to let him know that he's muted.
Oops. Sorry, guys. Thank you, Sarah, for the insight there, and really helping to frame, I think, the role and the value that the collective work can bring together. I think from the market view, we now think about our community, who are really what Impact Agora is all about. We've been working on this for a while. We started the private beta in January of this year, though, really. We have 32 members, 15 deals, about 255 million of opportunities on that central hub. And I think in some ways, what's even more impressive is in the midst of everything happening, just in March alone, the team onboarded 18 new members. And that is quite extraordinary to see that happen at present time. But of course, names and logos only tell us so much. So we thought we'd invite a few members and partners to briefly introduce themselves and why they've gotten involved. And first, Eva, if you can share a little bit about yourself and Conduit, it'd be great.
Thank you so much, Damien. So I'm Eva Maria Dimitriadis. I hope everyone can hear. I am managing partner of the Conduit Connect, and we are a business that really looks to enable the growth of promising high impact businesses through the Conduit community. We look at deals that really combine purpose and profit, so very much suited to what you see here. And we've worked very closely with David and the team and Damien's team over the last year or so to actually use Delio as our platform as well. It's a fantastic platform, as you saw from the demonstration. Where we really focus our efforts is on startups and scale-ups that are typically raising from about £500,000 to £30 million, so quite a broad spectrum. But what unites them is that they are in some way aligned to the Sustainable Development Goals, and that the mission is really core to the business, as is pursuing profit. Roughly, our businesses tend to sort of form a few different buckets. There's health and wellness, environment, education, finance and financial inclusion, and sustainable consumerism. And so we're very excited to be able to share a subset of our deals on this incredible platform. We believe, especially at times like this, that it's important to galvanize the efforts of everyone who cares about solving such issues, and we're very grateful to Barclays and to Delio for really deepening the ecosystem in this way. We've shared a few deals already. Those of you who have been using it as beta users or who will be joining after this will see one is a Bangladeshi healthcare business, one is a Vermont-based renewables business. So it's diverse, and we're very excited to see the deals and opportunities shared by other members.
Thanks so much, Eva. So let's move on to Simon from Resonance.
Hi, can you hear me?
Yes.
I'm Simon Chisholm, Chief Investment Officer at Resonance. So for those that don't know us, Resonance is a social impact investment company. We have had a single mission really for the last 18 years, which is to connect investment capital with social enterprise all across the UK. And we do that by being an FCA authorized fund manager, but we've been designing and managing impact investment funds that channel investment capital to the capital needs of social enterprise. So what that looks like is a series of impact funds now, many of which will be available on Impact Agora. For example, property funds, which work with social enterprises in a number of different need areas. Homelessness, so there are 80,000 individuals and families across the UK in temporary accommodation, bed and breakfast, essentially stuck there. And we have a very successful collaboration with homelessness charities to use a property fund that delivers good property returns to its investors to allow them to scale up solutions for those individuals to move back into normal life in the private rented sector. Other examples of that have included property funds that are now focusing on the needs of individuals with learning disability to live more fully in residential property in the community rather than in institutions. And also a new initiative that David mentioned briefly, which is the Wish Fund, Women in Safe Homes, which is working with women's sector organisations around the country to provide the property they need to help women in a number of situations, including those fleeing domestic abuse. So those are the property funds, and we also have a number of funds that focus on the needs of social enterprises for growth capital. And those really focus on a regional basis, allowing investors to invest into smaller scale social enterprise in very diverse different business models and impact areas, but utilising the social investment tax relief that government is providing, similar to the enterprise investment scheme. So that's really the nature of our funds. And we're really excited by Impact Agora. We've been seeing obviously a big interest in impact investing over recent years, but there's a need for good marketplaces. And by good, I think we mean efficient and credible marketplaces. And I think the use of technology with Impact Agora is going to help enormously. And the credibility of the marketplace we hope will establish over time and be a real place that investors can come to and see a wide variety of product. So we hope it's going to raise the profile of impact investing. We hope it's going to give investors that range of opportunities to match their impact preferences. And we hope ultimately it's going to channel more investment into impact and into social enterprise.
Great, thanks so much, Simon. So we'll jump over to John from ICA to talk a little bit more about what they're up to and why they've joined.
Great. Hi, everybody. I'm John Coker, one of the founding partners of ICA Ventures. We are a new venture capital firm focused on, I guess, built on two core principles. The first is that we believe the most valuable businesses of the next 20 years will be built with a clear social or environmental purpose. And the second is that we believe founders and their ability to develop with their businesses and push their mission of the business and sustain their mission of the business is the single biggest driver of success in venture investing. We are specifically focused on consumer technology, and within consumer technology, we focus on consumer healthcare technology and new sustainable, environmentally sustainable consumption models. We're in the process of closing a £60 million first fund, actually hopefully making our first investment next week, which, as you can imagine, has been quite challenging in this environment. There's a team of 3 founding partners. So I personally spent 13 years in venture capital. First 11 of those years was at a venture fund called MMC Ventures, where I joined in 2007, became co-managing partner in 2015, and dual led the firm for 3 years. One of the other co-founders, Camilla Dolan, was on the investment team with me at MMC for 4 years, and then Andrew Richardson, who's the third partner, was spent 8 years helping to build a recruitment firm, and he specifically focused on helping founders scale their businesses and develop their leadership over time. I guess kind of key things that we're excited about in terms of joining the community, which is Agora, is our mission is to integrate mainstream venture capital with impact investing and bring on board the best processes that we can find from both of those. And I guess communities like Agora are an opportunity for us to share ideas and try and create some transparency and consistency in the way that we think about measuring and assessing impact. And we're also really keen to meet founders that are raising capital and partners that we can co-invest with. So they're really excited to be involved.
Fantastic. And lastly, Marion.
Can you hear me? Or?
Now we can.
My name is Marijn ten Tijen from Amsterdam. I'm an investment manager at K+V. We are active in both the demand side and the supply side for which is relevant for Impact Agora. For example, we manage one of the biggest impact funds in the Netherlands, PDENH, which is mostly focused on energy transition and the circular economy. On the other hand, with K+V, we also focus on the supply side because we manage several ecosystems for impact entrepreneurs to raise funding. So actually, from both sides, our organization observes that there's a lot of demand for a platform like this, because on the investor side, especially in venture capital landscape, more collaboration can ensure that more deals are being made. And we think a platform like Impact Agora can contribute to this significantly. An offline version of this platform is already being organized by us. It's called Co-Financing Our Future, an event, peer-to-peer event where impact investors meet in the Netherlands. And we think Impact Agora could be a great add to the ecosystem in order to get more sustainable deals and impact investing deals done. So we really would like to contribute from the Netherlands in order to make more international deals work. So have investors from the Benelux meet with, for example, UK investors, and on the other hand, show interesting impact entrepreneurs to the rest of the world through Impact Agora.
Thank you very much, Marin. And I think what's really exciting and interesting from everybody that we've heard, I think a lot of the language tends to be very familiar and for all of us, which is part of the idea here in terms of being able to connect the different organizations who all share a similar philosophy and vision around what they're trying to do, even if they're focused in different sectors or in different ways. But at the same time, thinking about, well, how do we build and grow this community at a wider scale in the international aspect of things? Now, it all sounds great in theory, but obviously the challenge is making it work in practice. And we was valuable to bring in one more viewpoint today, which is Rod from UK BAA, who's built that community of angel networks and early stage finance for the UK, to share some of his experience around the collaboration, the connectivity, and the challenges of early stage capital raising. So Rod, thank you for joining.
Thanks, Damien. Hi, David. Good to see you all, and thank you very much for having me here. Quick introduction on me. I'm the Managing Director of the UK Business Angel Association. In a nutshell, we're the trade association for angel and early stage investing. So our role really is to help build, connect, and grow that kind of early stage ecosystem. About 200 organizations that we work for and represent, from angel groups to investment funds to equity platforms, but also accelerators, corporates, advisors, government agencies, royal societies. Our role really is to help build better connectivity and education and awareness of early stage investing across the UK. Some of the key things that we do, and now is a particularly busy time for us given the current environment around COVID-19, we do quite a bit of work around kind of representation of our industry to government level. So we are currently, and I thought it would be prudent to reference it a little bit given where we are now, doing quite a lot of work around lobbying to both Treasury and the BBB to bring additional funding support to the early stage community. I think some of the initial, although not quite clear, some of the initial support structures out there aren't quite applicable to the early stage businesses. So we're working quite hard to look at a kind of multifaceted view to either increase and loosen up EIS rules, to get some more co-funding support as well, just to help our early stage investment community at this quite potentially very challenging time. not just for the investors, but for the founders as well, of course. So I thought I'd just kind of reference that as a trade association. It's one of the key roles that we play. So I wanted to talk a little bit about why we kind of supporting and involved with the Impact Agora and why we think it's important. Well, it kind of works towards a few key challenges that we see as a trade body. And I think, key challenge number one is the fact that, these fantastic, impactful businesses that are, the great success stories of the future all started with early stage equity. That kind of early capital, in my view, is one of the kind of the engine house of innovation for the UK. There's a huge amount of grant support out there from Innovate UK, deploying hundreds of millions of pounds per annum. There are fantastic co-investment funds, regional co-funds across the UK, but they're all kind of matching and going in alongside that kind of core early stage equity. So we think really, building and growing awareness around that is incredibly important. I think the more funding we can bring to those early stages, the better, especially that kind of pre-Series A piece as well, which can become challenging. It's a really big grown-up round, but it's kind of a lot bigger than kind of startup money as well. So I think that's a really strong thing for us to see that. Another thing that this does actually, which has been really interesting. So we think it could well help with that kind of the regional imbalance that we see across the UK specifically. So for reference, so we actually operate a deal share platform. One of the big things is about building better connectivity amongst our members. We operate a free deal sharing platform for members, operated and powered by Delio, hence why I've been asked to speak today. But what we found actually is by bringing more online, you can kind of break down traditional barriers. So whereby only looking for things closer, to my office where I can go in and see them and kick some tires, I'm actually able to see businesses from anywhere and everywhere. And there is a really big problem, specifically in the UK, around this regional imbalance. I think something about 70% of early stage equity is going into London and the southeast, predominantly the Golden Triangle, quite frankly, but 70% of early stage businesses are based outside of the Golden Triangle. So there's a huge disparity between being based in London, outside London, etc. So that's a real big issue that we see as a trade body. And I think the more kind of online awareness, online platforms, and visibility of opportunities across the UK, across the world, I think is a fantastic thing and can really help investors to see a wider range of great businesses. Because at the end of the day, it's about, when you're investing in a company, it's about investing in a fantastic idea, a great innovation, bringing meaningful impact. And if it happens to be based in somewhere in the northeast, it's irrelevant. Really, it should be irrelevant, quite frankly, anyway. So that's a big thing that we think as a big supporting factor for our ecosystem. And I guess the other piece really is around connectivity. So especially at the early stages, it's a very kind of fragmented and very large ecosystem. We know under EIS there are £2 billion deployed every year from individual investors going into the kind of early stage enterprising businesses, and yet it's very hard to find out who they are. Where's that coming from? How is that capital? How is that connected together? And we think it's one of the kind of key issues our industry faces is around building better co-investment relationships, better connectivity. There are two sides to it. We want investors to build great, meaningful co-investment relationships so they can diversify their portfolio more, so they can bring more additional support to founders on the ground by investing with like-minded other angel investors, angel groups, VC funds, EIS funds. We think they should be investing collectively and together. They do, but the more of it, the better, to be honest. And the other piece is around that connectivity piece between different stages of funding. So you get from early stage SCIS, EIS, kind of early seed funding to pre-Series A to Series A, B, C, D, and beyond, and hopefully expansion, success, exit, and great times for everyone. But we want the different investors who act in those different stages of funding to work better together as well, because from a founder's perspective, they just want to run, grow, and build their fantastic businesses. They want to make that big impact out in the world, but they can't do that unless they have good funding, and that funding can transfer to the next stage, the next evolutionary stage and step for their business as well. So we want the investment community to kind of work together collaboratively to help make sure these great businesses get funding. And that's where, one of the key things that I see, Impact Agora bringing to the table. And let's face it, it's based on a really key part, which is around impact, having a meaningful impact on people and our lives. That to me is one of the best things about being able to invest in early stage companies, is that not only can you make an impact by supporting a great early stage fledgling business that will employ people in their region and their area, but also you're actually investing in a company or a technology that can make a massive difference to people's lives across the world, whether it's through health tech, whether it's through green tech, whether it's through anything. It makes a huge impact for people as well. So for me, you know, any initiative that kind of ticks any one of those boxes is a really big thing for us. And I think it seems, you know, with a fair wind, that these guys have a good chance of, I think, you know, ticking all of them, frankly. So yeah, that's a really exciting thing.
Excellent. Rob, thank you so much for sharing some of that. And definitely, I mean, we're already seeing where the opportunity or the ability to transfer deals, we've done that in a couple of instances already. And then onboard members comes through from UKBEAA, and that's where the technology becomes interesting as well. We are going to open up to some questions. You guys should have a question opportunity or a question box to sort of fill in questions. We'll try to answer some of those. But just in advance of that, I guess, David, you've been listening in quietly, patiently. Any reflections in terms of things that you've heard and sort of where the connection point is for us from an overall ambition for Agora?
Yeah, no, thanks, Dan. The two things I was just checking, just writing notes I went through, so do forgive the looking down as going through, but I was just ticking off the words that I heard most from all the different speakers were community and mainstream. And just to talk about the second one is the bit that actually really excites me, is that connectivity with the mainstream. And that's where I frankly see Barclays bringing the most kind of difference to this market. I know, Damien, hopefully we've said it a lot. There's a lot of good work that you guys are putting into doing this, but the mainstream is the bit that most excites me, is that bringing investors where they aren't impact investors. I think if every impact intermediary I work to can go to the same 10, 20, 30 investors that are out there that are impact investors, but that ability to then bring that deal flow, connect it through to the broader audience, whether that be the high net worth capital, the family office capital, or even some of the CVCs or other institutional investors that are there, bringing that to mainstream investors as good quality deal flow that, yes, it does have a great impact, very intentional impact, but is actually looked at through the lens of a mainstream lens. And John talked about it from UK, merging those two together. Simon talked around about attracting mainstream investors. So that's the bit that I think, out of everything I've heard, community is an obvious one given what we're trying to achieve, but that mainstream resonating through it is something that very much excites me about what we're doing here.
Yeah, and I do have to say, I mean, it does seem odd in some ways. You know, we are really happy to be sponsoring this and recognize, and the beauty of the Delio technology is, you know, people will find deal flow that may never reference the fact that they found it through something that we've sponsored, and we're okay with that. I mean, part of what we want to do is service ourselves in terms of the clients that we have and be able to provide that deal flow or share that deal flow for our purposes. But quite honestly, getting other organizations, and this is where, you know, Delio's connections and who uses the platform already is really exciting, I think, also for us in the wider sense, to be able to move things forward more generally. We are getting a couple of questions coming in. One of the things that, I guess, as we get fed those questions and can start to go through them, is looking now at sort of getting involved in the types of organizations that we are looking at. I know from the polling at the beginning, we've got a good mix of those who are actually looking for deal flow and those who are looking to provide deal flow, which is exactly the types of things that we want to be able to have in terms of building that network and that community. And I do think realistically, it's going to take us a little bit of time to be able to do that. You know, as we scale up, the likelihood increases of everybody being able to find the connection or the matching that they want to have. But if you are recognizing yourself in that list and what we're saying is interesting, then would love to have you guys involved with us. Looking at potential questions coming through.
So do you want to read the first one to you, Damien, see if you want to take it?
Yeah, sure.
Sure. Are all the deals that are published on Agora screened by Delio or Barclays, or is it simply a list of any companies that are interested? If there's a screening criteria in place, what is the key criteria?
Yeah, so it's a great question and one that we do get all the time. I think the role of for us and Delio as well, so we will not be due diligencing the deals that are coming through unless they have potentially come through our investment bank. So our role is really to be able to provide the support for the community. What we are doing is looking at who the deal flow providers are, and that's really important. So entrepreneurs cannot sign up directly. They have to come through a sponsored organization that is in line with the ethos of the community, and that's where part of the value comes in terms of managing who can get access to it as well. And if you cast your eye back or think about what you saw in that brief demo, what you saw in the tombstones of the deals was actually who the deal came from. And really, again, going back to the idea of intermediaries playing a role in being more visible, if you are seeing a deal flow come from Resonance or come from Conduit, you will see that on that because they're the ones who put the deal flow forward. So from our perspective, if we tried to provide that or overlay that diligence, I think it would have slowed down massively in terms of the opportunity to introduce and make connections. But that also has to do with who's coming onto the platform. So at the same time, we're not talking about retail investors. We're looking for qualified and professional investors or institutions really who have their own processes to manage a lot of the compliance around it. Now, Delio is regulated in some ways, and I will let David share sort of how that role, the role that they play there.
Yeah, thanks, Dan. And so that's it. Our kind of role is creating that regulated environment where people can come together for that professional investors. So as Damien says, it's not designed for the end retail. It is designed very much for the intermediaries, the institutions to come together in that one place. And what we see then is that onward distribution, though, is governed by their own regulatory rules. So Barclays take that to their own private banking clients. They will be the ones responsible for opting them up or determining if it can go to retail investors and work through the framework between the different institutions. In the exact same way, a Rathbones could turn around and say, we want to now make this available to our own clients. We like this deal, we're going to make it available. It can go through Rathbones' own criteria for that. So it's great for other wealth managers, as was said throughout that as well, is for other wealth managers to come on board, having that process in place for accessing the flow, but then being able to package it up in a way that's right for them to onwardly distribute to their own clients or onwardly commit on behalf of their other clients.
Cool.
And I think that covers 4 or 5 of the other questions that seem to have come through was around how can I sign up? Am I eligible? Am I not? And I think whether you want to take this down, but to start, it's about being an institution. If it's on the capital raising side, whether it's direct, a fund, a co-investment, it is about you are vetted based upon your process and your commitment to impact and what's your thesis and how you approach impact investing. When it comes to the capital side, though, it is a lot more fluid on who we're bringing. As it's come back to that point around mainstream, it is bringing investors that potentially just have an interest in impact and didn't know what it was, or even just an interest in private deals generally. And that's both direct investments and funds, LPs, as well as people wanting to go from venture all the way to big private equity transactions. As long as you are a professional investor or an institution acting on behalf of the institutions, then you can come on board into that. There are a lot less restrictions, more regulatory restrictions, criteria from the capital side, whereas the deal flow partners, as Damien said, it's a vetting process. So if you are finding out more about that, what it takes to become a deal flow partner, then get in touch with the team. As you can see here on the register, your interest is get on board.
And I will say, and I expected probably one of the other questions, we have focused on the UK market, and therefore the regulatory environment varies depending upon where we're going. The ambition, and that's why you already heard Moraine, talking about sort of where the Netherlands and Benelux region comes into play in terms of their role, Switzerland, obviously Hong Kong, other places where we are and sort of want to be able to scale out. I think, again, the ambition and the opportunity and the role and power that we play is actually being able to help to build this out to a much larger scale. Obviously, the regulatory requirements in the different locations will vary as such, and that's also, Delio has great opportunities and has worked and is working in many of those locations already. But this is starting in the UK, home base, but thinking immediately about how we are scaling out to other locations, both in terms of partners, but also in terms of investors. David, any other key questions? I'm conscious of everybody's time, and we had one more thing that we wanted to do in terms of the polling.
Yeah, well, if you want to go to the polling, whilst I just there's a lot of common threads through them. So if you want to go into the polling and move on to that and talk through there, then I can distill the questions and wrap up messages. Okay.
So we've got 3 questions for you guys today. As we said, we want this to be community-based, and the questions are going to last a fairly short time, sort of 20 seconds each. We'd love to get your initial reactions to these in terms of sort of what we should be focused on and where we need to be going. So Matt, appreciate it a little bit early than we initially thought. Do you mind throwing up those questions and we'll run them sort of 20, 30 seconds each? Sorry, that was the first question, and we're going on to the second. And then lastly, fantastic. So I have to say, we had planned on asking you all those questions at the very, very end, but wanted to take advantage, I guess, of making sure that we ended on time for you. What we'll do is we will take the feedback first on the first question. The other two, we'll probably look at trying to, if there's insights coming out of it, trying to share the results with you outward. But really, thank you very much for taking a moment and helping inform what we do next. David, were there any other questions that came through?
Yeah, the plenty of great questions, and which can answer more, but there's one. I've been quite selective on my picking here, and unfortunately one that ties in nicely. A little bit of wrap up is kind of, there's a great question here, is what is the inflection point we think for a community to be self-sustaining? And I think, like, I don't have a clear answer on that, so it's a hard question. I don't know if you do, Damien, but I think the way I see it is when multiple institutions get on board and are happy in bringing it into, it's about the kind of how people engage with it and do that. And I think the only thing I can say today is getting to that inflection point quicker and easier is the bit that I think we should all be focused on at this point in time. And that's what I generally, our ask is from here, is that for people to talk about this, to get involved with this. If you have great impact deal flow and you're wanting to find new investors and syndicate it out, if you're raising an impact fund and want to reach that wall of capital, if you're looking to kind of find out new impact deal flow for you or for your clients, that it's a great place to get involved, and it's easy to get involved. It's free to get involved. Then that's where just the ask is to get in touch with the team. There's a great team involved. You can get in touch with the team there, but Raresh, Ash, and Matt have done some fantastic work behind the scenes. Both Delio and Barclays are on board on hand to answer anything else as well. But the Impact Agora team there that have been driving this are great, and they will help guide as many people through this as possible. And we look forward to scaling together. And really, we'll only get that point if we all work together and drive that forward. And that will see how the impact ecosystem continues to grow and evolve and can really turn into something special by having lots of different parties engaging in their own way.
Yeah. For me, I don't think there's a single inflection point on these things. If I go back through the milestones that we've hit, each one of those has helped to move and generate some momentum behind what it is that where we are today and where we are from the, go out and doing good custom development testing and actually hearing repeatedly, to getting the first 4 people getting tested, Conduit and others, to go, here, what do you think of Delio's technology? And them saying, wow, this is great. And then starting to connect up in the private beta and getting, really thrilled to have those early adopters, and grateful to Delio and the first members who have joined, really without that true inflection point. I think opening up now, we're starting to hit a new one. I think the unfortunate circumstances of where we are today in terms of a physical location or lack thereof means that we need to find different ways to be able to connect, be able to find and meet each other in this space if we're going to make it survive and scale and grow. And so in some ways, our hope is why we've opened it up now, is to say, well, look, this is another opportunity for an inflection point. At Barclays, we're excited to have supported the start of the journey, but it's just the start in some ways, and an important one. I guess to me, the final thing is almost the inflection point is always for any individual firm, really, in terms of, is this helpful to you, and sort of how does this help grow and scale what it is that you're doing. But I do recognize that in some ways, and why we're excited about this, is alone, all of us are smaller, but together we're much bigger. And certainly the hope that we have around this is that, we are able to come together as a community and keep capital flowing to the intermediaries and the entrepreneurs that are really solving the challenges that we have. And so for me, that's, it's an ongoing inflection point as opposed to a single one. Anyway, we, from our side, I think are out of time. Want to thank you from Barclays for joining very much. Delio, David, any final thoughts?
No, thank you very much, everyone, and look forward to continuing to work on this and scale it.
Thank you.
Take care.